So good evening all of you. I hope you all are doing good. Good evening. So let us continue the discussion where we left yesterday. That is the discussion of depreciation under PGBP. And today we will complete PGBP depreciation part. And then we'll move ahead with the next part if time permits. Okay. So now pay attention please all of you. The last thing which we did was with respect to the treatment of subsidies, grant, reimbursements, waivers, etc. under the income tax law, right? That is something which we have done in the last session. Okay. So now there is one ICDS based on that. I'm keeping that on hold as of now. I'll be dealing with that sometime later. I am moving ahead with the next part, skipping that ICDS for as of now. The next part is your next explanation. If you remember, we were doing explanation 10 yesterday, and then the question of income arised and all those chart etc. we have derived out of this explanation and the definition of income only, right? So in the order of the law, we have to do the next thing is explanation 11. Now what does explanation 11 talks about? Pay attention please all of you. It's a very simple explanation, nothing great as such, not very important for exam also, but yes, it is there in the law. Pay attention please. Suppose there is a person by the name called as say Mr. A. He is a non-resident and he stays in USA. He stays in USA and he is doing business in USA. Okay. Now in 2000, previous year 15-16, he has purchased a computer in United States, say of 1 lakh rupees. Okay. For his business purpose. Okay. Now, obviously, I have a very simple and a logical question in front of you all. Obviously, this person will not be liable for tax in India. Why? Because he is a non-resident and he is doing business in United States. And because a non-resident is doing business outside India, his income is neither accrued in India nor received in India. And therefore, his income will not be taxable in India, right? He is obviously not subject to tax in India. But, say for example, after a few years, say in financial year 2023-24, suppose he comes to India and he opens a branch in India. And with the help of that branch, he is doing what? He is doing business in India. So if he is doing business in India with the help of that branch, now will he be liable to tax in India? The answer is yes now. Okay, I am just writing over here, he is coming to India. Because now his income will be accrued in India. So to operate this branch, he is transferring this computer from United States to India. Okay. So now I am asking you a very simple question. Because he is doing business in India, this computer will also be subject to what? Please say. Depreciation in India, right? Because he is doing business in India. Till now he was not doing the business only, so the question of depreciation did not arise. But now he is doing the business in India. He will claim depreciation. So now the question in front of us is, what will be the what? Actual cost of such asset. Okay. So shall we see explanation 11? That will give us the answer to this question. Read. Asset brought into India by a non-resident or foreign company for use in his business or profession. Actual cost will be what? Actual cost as reduced by the amount of depreciation calculated at the rates in force as if the asset was used in India since the date of what? Acquisition. So we have to assume what? We have to assume that that computer was used in India since what? Since the date of acquisition, that is since 2015-16. And we have to compute what? The depreciation accordingly. And we have to compute what? The WDV which is there today. Whatever the WDV which will come today, that will become what? That will become the actual cost in the current year. Is it clear to everyone? Please say. So just go through this illustration which is there below. Please. This illustration, this example. Okay.
I have a question.
Yeah, please.
In explanation two, we didn't include the year of the transfer because um, just to follow up on that question, couldn't we argue like
So this is a very simple case, nothing great as such, not very important. Also, don't focus much on it as far as your academic life is considered. Academically, it's not a very important explanation. Okay. Now there are few more explanations after this. That is explanation 12. Pay attention, please, all of you. There is explanation 13. I am keeping that on hold as well because that is something which is related to some capital gain topics. This is something which is related to some section 3580. You will forget it. I will not forget. Don't worry. I will definitely address these issues at respective time at the respective provision. So whenever we'll be doing the provisions of investment link deductions, 3580, you might have done it in your CA Inter also. So we'll be address that along with that particular provision 3580, this particular explanation. So right now, what explanations we have done so far is explanation 2, 3, 4, 4A, 5. After that, we have skipped few of them and we went to 8, then 9, then 10 and then 11. So in all, we have done 9 explanations so far out of all the 15 to 16 explanations which are there. Okay. Rest of the explanations we will be dealing, don't worry, one or two of them we are going to deal today itself in the next concept which we are going to do in the next half an hour. Now, let's move ahead with the next concept. We are keeping the discussion of ICDS on subsidy on hold as of now. Let's move on to the next concept, and that is also a very important concept for us academically as well as practically, and that is the treatment of unabsorbed depreciation. What is the treatment of unabsorbed depreciation under the income tax law? So the treatment of unabsorbed depreciation is given in section 32 subsection 2. Pay attention, please, all of you. Pay absolute attention. Now, how unabsorbed depreciation is different from a normal business loss? Say this is unabsorbed depreciation which is allowed to be carried forward and set off under section 32 subsection 2, and this is your business loss which is allowed to be carried forward and set off under section 72. Now, how both of them are different in treatment? There is a great difference between the two. The government is very liberal towards unabsorbed depreciation, whereas as far as business loss is considered, the government is not that liberal. The government is harsh. Liberal in what sense? Harsh in what sense? When I talk about business loss can be carried forward and set off for a maximum period of 8 years, not more than that. But unabsorbed depreciation can be carried forward and set off for unlimited number of years. There is no restriction of what? Time over here. That is the first liberty which the government gives to unabsorbed depreciation as compared to business loss. Now, the second liberty which the government gives to unabsorbed depreciation as compared to business loss is, when I talk about business loss, it can be carried forward in the next year and it can set off only against similar income. Similar income means what? It can in the year, listen carefully, in the year in which you incur business loss now. Suppose you are incurring business loss in 23-24. So in the current year, you can set off against other heads also to some extent. You can set off your business loss against HP. You can set off your business loss against capital gains. You can set off your business loss against income from other source. You cannot set off your business loss against salary. That is not allowed. I hope you might be remembering that particular thing. Yes? You cannot set off your business loss against salary. In the current year, you can do that. But do you remember, once you carry forward to the subsequent 8 years, then you cannot set off against other heads. Do you remember that? Do you remember that, Palani? So that is a very restricted way of what? Carrying forward and setting off. It means it can set off only against its own income, right? Its own head. It cannot go to other heads. But whereas unabsorbed depreciation is considered, it's very, very liberal. You can set off unabsorbed depreciation there is a priority over here. First against PGBP. You have to set off against PGBP first. But if PGBP is not there, you can set off against what? Any other income also. When I say any other income, there is only one restriction, that is except salary. Except salary, you can set off against any other income. In the current year also, more importantly, listen carefully. And in the, can you complete the sentence? And in the subsequent year also, up to the life of the assessee. So this is a great benefit given by the government under section 32 subsection 2 for what? For unabsorbed depreciation. Now why such benefit is given, that is a different case altogether. We'll come to that in a while. But before that, I would like to ask you all one question. Please try to answer that question if possible. Suppose there is an assessee whose PGBP income in the current year is 10 crore rupees. Okay. Now he has three things in front of him. One, he has unabsorbed depreciation brought forward, say of 6 crore. He has brought forward business loss of 6 crore. And third and the last thing is, he has current year depreciation of 6 crore. Now you guys have to tell me what should be the priority of set off over here. What should be set off first? What should be set off second? What should be set off third? What is the priority in which you have to claim the things? Please tell me. First, what? The very first thing you will always set off is current year depreciation. The reason is very simple. It is mandatory to claim depreciation. Yes or no? It is absolutely mandatory to claim depreciation. You don't have any other second thought. Right? It is mandatory as per the income tax law. To be precise, it is mandatory as per explanation 5 to 32(1). There is a specific explanation on it, right? Second, what is the second thing that we are going to set off? We will set off business loss now. Why? Because it will otherwise expire after 8 years, right? And then the third thing will be what? Will be your unabsorbed depreciation. Is it clear? This is the order in which we are going to set off the things. If these three things are given in the exam, you should know exactly what has to be done first, then second, and then third. Obviously, that priority I have written in your book also. You can see over here if you want, and then we will try to understand once that why the government has given such special benefit to unabsorbed depreciation as compared to business loss. Okay. You can see over here on page number 2.9 that this is the treatment of unabsorbed depreciation. You can set off against what? Against PGBP or against any head except salary. Carry forward also, set off against PGBP or against any head except salary. Okay. And there is what? No time limit. And then more importantly, the priority of set off is this. First this, first this, first this. There is something written in the bracket. That is just an interlinking of some provisions that we are going to do in the subsequent lectures. Okay. So I am not speaking much about that today. We will come to know about these brackets, why I have done so once we do these two provisions. 3619 and 3514, whenever we'll be doing, we'll come to know exactly why the government has done so. Okay. So that is what this provision is all about. It's an important one while solving the total income question in the exam when you are supposed to compute the total income of the assessee. All these things, small things might help you to complete the question. Okay. Now coming to the discussion of this particular section. Why the government is giving special benefit to UAD as compared to business loss? What do you feel? What can be the possible reason behind giving special benefit to UAD as compared to business loss? Please tell me.
To buy more assets, sir.
Yes, Palani has said so that we can buy more assets. What will happen because of that? You will increase the capacity of business. That will eventually increase what? Maybe the employment or maybe the production if you are into a production, or maybe if you are into trading activity, then you are increasing your what? Your employment, etc. Definitely that is the only reason why the government is encouraging you to buy assets. And the government is telling you, don't worry, if you buy assets and if there is a loss because of assets, if there is a loss because of what? Assets, don't worry, we will give a special treatment to that loss as compared to loss which comes because of what? Because of general expenses. Because unabsorbed depreciation comes because of what? Because of depreciation, right? Because of capital expenditure. Whereas business loss comes because of what? It comes mainly because of the revenue expenditures, right? Your purchase cost, maybe your other operational expenses like salary, etc., like rental expenses. Yes or no? It comes because of that now. Therefore, the government has to give special benefit to that person who takes some kind of risk. Always remember that. Just try to let's go ahead one step ahead and further evaluate this issue. Let me ask you one very simple question. Why a person is hesitant to enter into a business? Why? Why? Why 9 out of 10 person who qualified under any profession goes for a job? Goes for a job.
Upfront expenses.
There are a lot of upfront expenses in the form of capital expenditure, right? So there is always a risk that what if I am not able to recover that capital expense, right? So there is always a risk. There is no risk in revenue expense. For example, if you feel that your business is not working, can you remove your employees from next month? Can you vacate your premise and stop paying rents? But the expenditure which you have incurred on capital expenditure, that is something which cannot be undone, right? That is an historical cost for you. That is a loss, permanent loss for you. Yes or no? So that is the reason government is giving special benefit for what? For the unabsorbed depreciation as compared to what? Your revenue expenses. Is it clear? So the government is saying, if you are, no, why are you worrying so much? The government is saying, if you are not able to at least have the courage to start the business. And if you have shown the courage to start the business, max to max, what will happen? Your capital expenditure will be what? Will be wasted now. It will be wasteful, right? Don't worry, we will not make it wasteful. You will do something in your life for a living now. You will do something at least to live your life. Yes, I will do something to live my life. So whatever you will earn except the salary income, whatever you will do, we will try to set off your capital loss because of depreciation against that income. Is it clear? So that will motivate a person to do what? To business, to do business, to start investing in big projects. So if it fails also, at least that project will be what? Saving my tax in future through some other income. Yes or no? So that is what this provision has been brought, and it has been so liberal by the government of India. Okay. Honestly speaking, shall I tell you one thing? A very good question asked by Palani. Sir, why accept salary? Why not? We can't set off this income against salary, right? That's a very good question. Now, Palani, if you ask me, the answer to this question is pay attention on the board. Generally, I do not get into that because that is controversial. But because you have asked me, it is my duty to address it. Honestly speaking, in section 32, subsection 2, it is nowhere mentioned. It is nowhere mentioned. You can go home and check section 32, subsection 2, and you can check now also on Google if you want. It is nowhere mentioned that unabsorbed depreciation cannot be set off against salary. It is nowhere mentioned. But it is your institute which says that unabsorbed depreciation cannot be set off against what? Say salary. Maybe the logic and the reason why ICI says so, I cannot go into their mind. I cannot understand why they are saying so, but I can make some logical assumption why they are saying so. I am not sure about it. Why they are saying so? Maybe that is because it is very clearly written in the law that business loss cannot be set off against salary. That you are sure or not? That is very clearly written in law in section 72. Very clearly. So with that logic, institute is making an assumption that UAD also come because of business. Yes. So therefore, UAD also should not be set off against what? Against salary. There is one more reason why ICI is making this assumption. There is a lot of controversy on this issue. ICI is not making a wrong assumption. I am not saying ICI is making a wrong assumption. There are a lot of case laws also which support what ICI says, but very clearly it is not written in the law. It is not written in section 32 subsection 2 very clearly that you cannot set off UAD against what? Salary. If I have a plain reading of section 32 subsection 2, I can set off UAD against salary also. But as per ICI, we cannot set off. And as per some judgments also, we cannot set off. I cannot completely write off ICI and say ICI is wrong. No, no, no. ICI is correct to some extent. There is a logical reason why. Because if the government will start to allow UAD against salary now, then what people will do? A salaried person will open a dummy business. Yes, he will do or not? A salaried person will open a dummy business. Now you please let me know. Even if you are a salaried person, do you have some assets or not in your life? At least you might have laptop or phones, or some of them might have cars, right? Now all of them are not allowed as a depreciation for salary, right? So you will open a dummy business. And by opening a dummy business, you will say that I have this much depreciation, but I don't have sufficient revenue. What shall I do? And therefore my depreciation is what? Unabsorbed, right? So allow me to set off against what? Against my salary income. Okay. And the government does not have time to check such cases, because such cases will be very small for the government to check, right or not? And that is the reason there are so many judgments also which says that you should not set off your UAD against what? Against your salary income. Okay. Because if you see, even today, the majority of the population in this country are salaried class only, right? Majority of the population are more or less salaried only. And therefore, if everybody starts to do such practice, it's very difficult for the government to do what? Government to keep a track of whether it is a genuine. I'm not saying salary person cannot do a genuine business. A salary person can do a genuine business also. But there are high chances that there is a fake business also, just to disclose what? Certain undisclosed what? Unabsorbed depreciations. Okay. So that is the reason institute says that do not set off UAD against salary. I am again saying it is not only the institute. There are many case laws also which says that do not set off UAD against salary. But if you have a plain reading of the act is very silent about it. Okay. So for us academically, whatever is written in our book, we are going to follow that academically. I think so in CA Inter also you used to follow the same thing, right? I think so you used to follow the same thing. Anyways, I also don't say all these things in CA Inter. That is because you have asked, so I have explained that particular issue to you. Now pay attention, please. Let's go ahead with the next issue. There are small issues which are pending in depreciation. We'll complete depreciation today. The next issue is, pay attention, please, all of you. How to compute depreciation in case of amalgamation, demerger, or succession. How to compute depreciation in these cases? Let's try to understand that. Okay. What is an amalgamation? I'm just trying to explain you certain simple terms. I'm not getting into the technicality of income tax law as of now. As per income tax law, all these terms are specifically defined. Especially the term amalgamation and demerger is defined under the income tax law. The term succession is not defined. So I'm giving you the rough meaning as per the accounts, not as per tax. As per tax, we'll do later on. There is a separate chapter on that. You can see in your index also of easy notes, there is a taxation of demerger, taxation of amalgamation. I'm not getting into all those things because then I have to also speak about capital gain implication. I'm not getting into that. I'm only interested in today's discussion only about depreciation. So I'm just saying that basic meaning of amalgamation, we all know it's a merger of two companies. That's it. I don't want to say anything beyond that. What is demerger? Demerger is a breakup of two companies, right? One company is broken up into two parts. Okay, one demerged company and one resulting company, right? What is a succession? Maybe this is a new term for us. Succession means where you succeed from one entity to another entity. Like for example, you were a partnership firm earlier and now you are converting that into a company. So that is a succession. You were an individual sole proprietor earlier. Now you are converting that into a company. So that is a succession. So how to compute depreciation in these cases? Let's take an example. Suppose there is a company by the name called as A Limited. This is financial year 2023-24, which is applicable for our exams. And this company has some furniture. And that furniture is there in the form of an opening WDV. And suppose the opening WDV of the furniture is 1 lakh rupees. Okay. Shall I go ahead? Now suppose this particular company got amalgamated with B Limited. On 4th of October 2023, the amalgamation took place. And therefore, this is an amalgamated company. Amalgamated company means the purchasing company who is purchasing another company. And this is an amalgamating company. Amalgamating company means this is a selling company. Okay. Now, how to compute depreciation in case of amalgamation? So, there is a specific provision on it which says that, pay attention please all of you. In case of amalgamation, listen carefully, I am saying the provision in front of you. I am not making you read, I will make you read in a while. How to compute depreciation in this case? There is a special provision for it. And before I read the special provision, let me tell you a few things about amalgamation under the income tax law. The income tax law is very liberal, very liberal, very liberal as far as amalgamation is considered, demerger is considered. Very liberal. There are plethora of tax benefits which are given by the income tax department for amalgamations under the income tax law. N number of benefits, N number of unimaginable benefits, uncountable. So many benefits. Let me make you count few of them. Like for example, generally what happens? If I sell any asset to you, then I will be liable for capital gains, right? If I even sell my personal asset like my house, am I liable for pay capital gain tax or not? The answer is yes. But in case of amalgamation, where the mergers and acquisition happens for billions of dollars are paid by one company to another for purchasing the asset, for selling the asset. Entire capital gain is exempt under section 47. Not even a single rupee would be taxable under the income tax law. What do you feel? The government is so liberal towards amalgamation that they will give so much benefit without any return. Definitely there is a return. There is a cost benefit analysis. The government is bearing such a big cost of giving tax benefit. Every tax benefit is a cost to the government. A $1 billion deal has happened very recently between HDFC and HDFC Bank. Yes or no? I hope you might be knowing very recently HDFC and HDFC Bank got merged. Not even a single rupee of tax was paid in the form of capital gain tax for transfer of assets. Why? The government is very liberal. Where a middle class person like you and me, if we sell our smallest of the house also, the government come to us to take capital gain tax. Obviously, there are ways to save that legally by investing, reinvesting. There are ways, but that is taxable. But in case of amalgamation, it is not taxed only. It is completely exempt. They are not liable to pay any kind of tax on amalgamation. Capital gain tax I am talking about. Similarly, what happens? In case of amalgamation, I am just making you count some of the great benefits that the government give for amalgamating assessees. Let me make you count one more benefit. What happens generally in case of losses, if there are losses and unabsorbed depreciation, there is a general principle of law which says that if I am incurring my loss, then that will be allowed to be set off by me only. My father cannot set off, or my partnership firm cannot set off, or my company cannot set off in which I am a director or a shareholder. No. There is a clear change of what? There is a clear change of what? Assessee, right? As per the income tax law. So the person who has incurred the loss, that person will only be what? Claiming the benefit of carry forward and set off. But that is not the case for amalgamation. In case of amalgamation, if A Limited has losses, A Limited has UAD, then the entire UAD and entire loss can be carried forward by B Limited. The government is not stopping here. See the benefit in benefit. There is a benefit in benefit also. The government is saying that we will allow the loss to be carried forward by B Limited. This is a benefit. In that, there is one more benefit that we will allow to carry forward for another 8 years. That is, B Limited can carry forward the losses of A Limited for what? For another 8 years. It might happen that A Limited has incurred losses 6 years back, right? So it is about to expire in the next 2 years, right? But in the meanwhile, A Limited got amalgamated with B Limited. These are very great kind of tax plannings, which happens at a very big scale. Therefore, The point I'm trying to say is when you will read this provision, when you will learn this provision with me for the next 15-20 minutes, you will find out some great benefits here also. Don't be shocked. That's what I'm saying. Okay. You should not be felt shocked. That is the reason I'm telling you in advance only. The government is very liberal towards amalgamation, demerger, etc. The reason is very simple. If amalgamation is not promoted, then what will happen? What will be the impact of that? Please tell me. That is a valid point. Apart from that,
A lot of progress takes place through restructuring,
okay,
either segments or extra synergies, positive synergies, and growth.
lot of progress can take place because of positive synergies, etc. But there are a lot of amalgamations which happens because the company is not in a position, the selling company is not in a position to stand, right?
That's also the part synergy.
Right? The selling company is about to close. So there is some other company which is coming and acquiring, right? So if we do not encourage this, if we discourage this, what will happen? There will be job losses, right? Yes or no?
Yes, sir.
If there is somebody to acquire that company, at least those people will get some temporary place to survive in the new company, right? The government cannot do this yet. It is a shame on the government even if one company gets closed and say 10 to 15,000 people are jobless. It's a shame on the government. It's the duty of the government to restructure the companies. Yes or no? And for that, they have made so many laws. They have made so many laws or not? In IBC and all has been made for that only, no? Insolvency and bankruptcy code, all these laws have been made for what purpose? For restructuring of companies only. That is the reason you have to give them tax benefit. You don't have any other option. You have to give them. Now coming to the provision. How to compute depreciation in case of amalgamation? Now I am reading the provision in front of you. Please pay attention and you tell me the answer. I am reading the provision. Start. I am reading from directly. I am not looking at the book. See here, please. I am not looking at the book. I will look at the book in a while. In case of amalgamation, in case of demerger, in case of succession, compute depreciation as if no amalgamation has taken place. As if no amalgamation. Assume as if there is no amalgamation only. Assume as if there was only a limited throughout the year. Please tell me, if I assume that, what will be the depreciation? Amount. I am on the amount.
10,000.
Please listen the provision once again, Palani. I am again saying. In case of amalgamation, demerger, succession, assume that compute depreciation as if there is no amalgamation happened only. Just assume there is no amalgamation and compute depreciation. Tell me how much depreciation will come. 10,000. That's it. You have to assume that there is no B limited. Is it clear? We have to assume that. Okay. So is it fictional or not? We are making a fictional assumption, right? That there is no B limited. Compute it. Have we computed? Is the computation done? Now bring back B limited. Now bring back B limited. Now I am telling the provision. Once again from the beginning. In case of amalgamation, demerger, succession, compute depreciation as if no amalgamation taken place. So while computing, assume that nothing happened. Okay? And once computed, have we computed the depreciation? Now the government says that now bifurcate that between both of them. Both of them means what? A limited and B limited. So listen carefully. While computing, what we are supposed to assume? Only a limited existed. Assume that. That is what I'm not saying that. That is what the law says. Let me make you read. That is what the law says. You can read this. Okay? So you have to go step by step. While computing, what are you supposed to assume? Nothing has happened. Everything is fine. Okay? But once computed, after that, what are you supposed to find out? That you have to split that between A and B. In what ratio? days ratio is the most logical ratio, right? It is written in the provision also. See that. Then apportion the depreciation between both of them on the basis of number of days the assets were used by them. Can you check that? Can you check that? Now you have to tell me A Limited has used for how many days? Please tell me. 180. So you have to compute it if you have any doubt. One day here and there and your answer will go wrong. From 1st April till which date? 3rd of October. Because on 4th October it was acquired by B Limited, right? From 4th October B Limited will get.
187.
Still you are wrong. It's 186. You can compute it. Okay. Are okay? You can compute it if you want. April 30, May 31, June 30, July 31, August 31, September 30 and October 3. 186 days, right?
October is 4, right?
3, not 4. Because from 4th B will get. Because B acquired the asset on 4th, na?
I was thinking 4th is also
No, till 3rd. So 180 for B, right? Yes or no? Repeat. Now let's compute fast here. No, it's not waste. 10,000 into. Compute just on the calculator. Just compute the amount, please. And this you can take as a balancing figure. Yes or no? Rather than computing twice. You can compute either of them. The next one will be balancing. This is how much? 1, 5, 0, 8, 2. And this one will come to 4198. 4918. Just wait. Okay. This is how we are going to compute. Now let me twist the things little bit. Shall I? Everything is same. Everything is same in the question. Yeah. A Limited is going to be liquidated now. There is only B Limited after the amalgamation. Okay. That's the reason I have written amalgamating company means what? Selling company. You might have heard this word. An amalgamated company means what? Buying company, purchasing company, right? Now I'm trying to twist this to some extent. Pay attention on the board, please. Suppose along with this opening WDV, A Limited also purchased some asset on 1st of July 2023 of 2 lakh rupees, which was also used from the same day. Okay. 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 Now, again the same provision. There is no difference in the provision. In case of amalgamation, compute depreciation as if no amalgamation has taken place. Assume there is no amalgamation only. So, therefore, in that case, how much depreciation will come on 2 lakh rupees? On the asset which is purchased on 1st of July 2023 and put to use on the same day? The depreciation for the entire year 20,000, right? Because it is put to use for more than 180 days, right? Yes or no? Now, the same thing. Once we have computed, now what are we supposed to do? Then split between A and B, right? Now the number of days will change, na? Now the A Limited is not using from 1st April. A Limited is using from which day? 1st July. So now from 1st July to 3rd October, how many days it comes to? Check. 31 days of July, 31 days of August, it becomes 62. 30 days of September, it becomes 92. And 3 days of October, it becomes 95, right? And for B, it will remain 180, right? For B, it will not change. Now, from 4th October to 31st March, that will remain same only. For A, the number of days have fallen. And therefore, now your total denominator will be only 275, not 366. Are you clear? So, this will be 20,000 into 95 divided by 275. Is it clear? How much it comes to? Please tell me, and this will be the balancing figure. 6909. And this will be balancing figure 13,091. Is it clear? So this is what you will compute depreciation in case of amalgamation. Now you can just see this and then I have to discuss few things on this. I have not completed the discussion. This is the same illustration which I have written on the board also. All these calculations obviously you will do when? No. The timing, I am asking timing, date.
End of the year.
Obviously after the year ends, right? In the assessment year. Because depreciation is not computed in that year. Na? For that you have to wait for the year to complete, right? So when assessed in the month of April, say May, June, July, whatever it is. Okay, before filing the ITR. You have to file ITR for both of them, A limited and B limited. Even though A limited is liquidating, but still in the year of liquidation, you have to file ITR. Now, I would like to draw your attention to one very important thing over here. Can I say in this provision, through this provision, the government is allowing depreciation in the year of sale also to A limited? What is the general norm under the income tax law? Do we get depreciation in the year of sale?
No.
We don't get depreciation in the year of sale. But here, are we getting depreciation in the year of sale also? Yes, that is the reason. If you see this provision properly, it's a proviso to section 32(1). Proviso means it's an exception to the norm. Are you clear? It's not the way normally a person compute depreciation. It's different from what a normal person will compute depreciation. Is it clear? Okay. Now, one last thing is there over here. Pay absolute attention, please, all of you. One last thing in this discussion. See on the board, please. And I am using some different color now. The amalgamation has completed. Okay. This company is closed now. The future is with this company, right? Now, my question to you all is, this asset, which was the opening WDV, I don't know when they have purchased, and this asset which was purchased for an actual cost of 2 lakh rupees in the current year, both of them will go to be limited or not now? Say na. It will go to be limited. Both of them will go to be limited, right? Now the question will come that if both the assets are going to go to be limited, right? So B limited will record that asset in the block of asset at what value? It, in short, what will be the actual cost to be limited? Are you clear? So the question is over here, whatever assets you get in amalgamation, in practical life, if you are an amalgamated company, means a buying company, you will get lot of assets from the selling company, right? So in accounts, you will record as per the purchase consideration, correct or not? Whatever is the purchase consideration, you will pass an entry, journal entry, then you will leave one line, whatever accounting you have done in your life. If the difference is coming on the debit side, you will record it as a goodwill. If it is coming on the credit side, you will record it as a capital reserve on transaction, right? That is something which you do in your books of accounts. But in tax, what am I supposed to do? There is already a block of plant and machinery furniture in my company or not? Say na please. There is already a block of all the assets. Now, there would have been a block of building. There would have been a block of plant, machinery, furniture in my company. And there are new family members who are entering to my room, to my house. At what value I should allow them? Are you clear? We need to answer that question. So the law says that you have to enter them. The opening WDV will enter at the same value of 1 lakh rupees. Okay? How much? Same value of what? 1 lakh rupees. And the current year purchase. The current year purchase will also enter into B Limited's house at how much value? Please say. At 2 lakh rupees. Is it clear? The opening WDV will enter at opening WDV only, and the actual cost will enter at actual cost only. Now you will be shocked that this might lead to double benefit. Yes or no? This might lead to double benefit or not? You have already claimed depreciation on 1 lakh and 2 lakh and segregated between both of them. Have you done that or not? Please tell me, have you segregated the depreciation on 1 lakh and 2 lakh already? Yes. So it will enter the block at this value. Okay. Is it a dual benefit? Yes, it is. Yes, it is. So be it. That's the reason I have said you. The law is very liberal towards what? Amalgamation. The government is allowing you. Where it is written, sir? It is written in a specific explanation. Please tell me what is the definition of WDV? Where is the definition of WDV? Just wait. Where is the definition of WDV? Section 43.6. So they have made one explanation below 43.6. And where is the definition of actual cost? So they have made one explanation in 43.1. Because you are acquiring two things. You are acquiring one old asset which has a WDV in the balance sheet, right? And you are acquiring one new asset which is not yet depreciated, right? So the one which is depreciated, for that we will follow the explanation below 43.6. And the one which is not depreciated, this is the first year of the asset. For that we will follow the explanation which is below what? The actual cost. And both of them are mentioned over here with citation. You can check over here, please. Just a second. You can check over here. What will be the value of asset to be shown in the balance sheet of B Limited? In the books of B Limited, sorry. Tax books, not accounting books. In accounts, you will record as per what? Your accounting standards. Whatever is the, I think so, there is some accounting standard 3, Ind AS 3 for business combination, I guess. 103. Okay, sorry. Which they term that as business combinations, right? They don't say amalgamation and all. So there is a dual benefit over here. So be it. So be it. Yeah.
The dual benefit is to the extent of the depreciation allowed to the transfer.
Right.
We will already anyhow
Will reduce. Yes, you are getting dual benefits to the extent the transferor has what? Claim the depreciation. Because whatever depreciation that transferee is claiming in the current year, that will anyways be reduced from the block of asset. That you have already claimed, right? And that you have to reduce also from your block. B Limited is claiming some depreciation. How much depreciation B Limited is claiming? 4918, 113,091, right? That will obviously be reduced from the block of B Limited. Clear? His doubt was, if you have not come across that doubt, it's better you don't raise that doubt. He has asked a question that dual benefit is to the extent of this depreciation. It is not to the extent of this, because this depreciation is belonging to whom? B Limited, right? That will anyways be reduced from the block of B. This will not be reduced from the block of B. That is the benefit for B, right? Which A has also claimed. A has also claimed, B will also take that benefit because he will not reduce that much block. So he will indirectly claim in future years, right? So that this has been kept deliberately over the years. It is not a mistake in the law. This has been kept deliberately to give further, you can say, one kind of a boom to the industry to encourage into what? Amalgamation here. So there are around 15 to 16 different kind of benefits which are given. I have made you count around 2-3 benefits so far. Rest of the benefits we'll see in a separate topic called as taxation of amalgamation and taxation of demerger. For that, we need to first of all understand what is amalgamation. It is defined under section 2. For that, we need to also understand what is demerger. That is also defined under section 2. So that's a very, very big concept. You might be knowing that in practical life, if you want to do a job, you can enter a particular department in a tax firm whereby that entire department will only do one thing, and that is what? Tax planning in case of what? Mergers and acquisition. So if you go to Big Fours, in Big Fours there are separate department for mergers and acquisition, whereby if you are stuck in that department, your entire life will go in mergers and acquisition only. There is no other thing that you are going to do apart from that. So it's a very complex issue in practical life. It's not a very simple issue because the mergers and acquisitions are also of thousands of crores of rupees, and therefore the clients are also ready to pay you hefty amount of money so that you do the mergers and acquisition in absolute lawful manner and save maximum tax to the clients. So there is a huge amount of fees also which is charged by the tax firms for framing a particular transaction, how it has to be done. It's not as simple as what we are doing academically over here. At least this concept is not as simple as that what we are trying to do. Okay. Anyways, coming to the next discussion, and the next discussion is, there are hardly 2-3 discussions which are pending. We'll try to complete that first today, and then we'll see if time permits, we'll move ahead with some more deductions. Okay. Questions will take up after the chapter is completed. The reason why I don't pick up questions in between, I'll let you know, because the moment I explain you the provision, and if I immediately take up the questions, you will easily answer. There is no challenge left with you then. Okay. Right now, suppose if I teach you additional depreciation, And if I go and ask you whether forklift trucks is eligible for additional depreciation or not, you will answer me within 2 minutes, right or not? There is no challenge as of now. The real challenge will come after the chapter completes. After the chapter completes, whether our mind work or not, yes or no. So we'll follow this practice of what? It will take, it's slightly time consuming for me, but it is more effective for us. Because after the chapter completes, we should be able to understand that this question might have provisions from different sections, and are we able to apply. So we will be having the practice of solving questions, all the questions which are there in your study material after the chapter is completed. Okay. And then after the entire syllabus is completed, we will be solving questions what? In the form of papers. So that will not have questions from one topic, but then we will try to interlink between different topics. So one question from PGBB, then suddenly assessment question has come, then suddenly international taxation transfer pricing has come into picture, then suddenly non-resident, then suddenly one IPCC topic chapter 6 has come. So likewise, we will try to train ourselves. Okay. I don't want to just make you fool by saying that, it's very easy, see, the additional depreciation, such a simple concept. You will feel very simple in class, but the real test of your knowledge will not happen by doing the questions simultaneously. Once a big chunk of topic is completed, then we'll complete a lot of questions of that particular topic. Okay. Anyways, let's go ahead with the next part, and that is, let's talk today about SLM depreciation. SLM depreciation is allowed to someone? Yes, to power generating units, to power generating and power distribution units. Okay. So let me give you an overview of this particular thing first of all, and then we'll read the provision. Pay attention on the board, please. Suppose if you are a power generating unit, power generating or power distribution, or you are engaged in both. You are doing both. Okay. So you have two options. The government is giving you two options. Okay. Option 1, option 2. Whatever you want to do. You are free to do. Okay. But then don't change the option on a yearly basis. You cannot change that option. Okay. So what is the option? Either follow the WDV method as per what? As per block of asset, right? That option is also there. Or either follow the SLM method. Now, if you are following SLM method, then as per individual assets. There is no concept of block in SLM. Okay. Here you compute depreciation as per your accounting principle. The way you compute depreciation in accounts, every asset is a separate asset. Okay. You don't have to make a block of asset. Is it clear? Now, given a choice, which is better for us? Considering the accounting knowledge which we have, what is better always? Where we can get more depreciation and faster rate? SLM. It is SLM, not WDV. Never ever, never ever WDV. It's always SLM. Na? In SLM, suppose if a 100 rupees asset I buy in a WDV and 100 rupee asset if I buy in SLM, which will depreciate faster? SLM will depreciate faster. Suppose it is 15%, it will depreciate 15% every year, 15 rupees. But WDV will fall from next year, right? So given a choice, it is very straightforward that 100% of the assessees will go for SLM, right? Then how it is an option? It's not an option then. You can say you have an option between two things when there are pros and cons in both, right? Then it is an option. Nah, this is not an option. This is the clear case that I will go for option 2, right? Option 1 is absolutely irrelevant, but that is not the case. We have to think there is some hidden thing over there. There is something over here which can tempt us to go for what? WDV, which will tell us that go for WDVR, don't go for SLM. SLM is waste. Now, what is that thing? For that purpose, I have a question to you all. And before that, I would like to read also the SLM depreciation provision once in front of you all, which is given over here on page number. Let's read the SLM depreciation, which is on page number 2.20. Shall I read? Depreciation for power generating units. Assessees in the business of power generation or distribution of power have two options to claim depreciation on straight line method. or if that is not followed, if you don't like that, then follow WDV. This we have already done, right? Now we are talking about SLM today. So SLM is given under section, which section? See the section properly, please. It's important for us. SLM is under which section? 32 subsection 1 clause 1. And WDV is in which section? WDV depreciation is in which section? Please tell me. Under which clause? Under clause 2. I am asking you this because that is important for my next discussion. Knowing the clause is important to interpret the provision. Let me read. Section 32(1)(1) provides that an assessee in the business of generation and distribution of power will be allowed depreciation in respect of building, machinery, plant, furniture being tangible asset. Everything is same. Know-how, patent, copyright, trademark, blah, 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 blah. Everything is same. Not being goodwill of business. Everything is same, right? Till here, everything, it is looking like 32(1)(2) only, na? Yes, same. Goodwill is removed from Finance Act 2020, 1/4/2020 in the entire income tax law. Everywhere goodwill amendment was made in the same year. Okay. Now, owned wholly or partly and used. Now you have to be very careful. Used for the purpose of what? At prescribed rate. Now the things have changed. Shall I read? On what? On what? There it was what? In 32(1)(2) it was what? On WDV of the block of asset. Here it is actual cost of each asset. Actual cost of each asset. It means here we will not follow which method? Block method we will not follow. We will follow individual method. And the method is what? Straight line method of depreciation. Okay. Now I have a question to you all. Please go in your textbook, not in the color book, because we want interpretation now. We don't want revision. Interpretation I want from you. Go in the textbook, and if you don't have the book, I am showing you, to the discussion of additional depreciation. Please, all of you. This is your discussion of additional depreciation. Okay? Okay. And now I have a question to you all is, if I go for WDV method, okay? Okay? Will I get additional depreciation? Read and answer. Don't be in a hurry, please. Read and answer, please.
Not allowed. Sorry, WDV allowed.
Think and answer. Think and answer. Don't be in a hurry.
WDV allowed.
In case of WDV, it will be allowed?
Yes, sir. Yes,
Okay, we'll come to the conclusion in while. What about in case of SLM?
not allowed.
This is for everyone, even those who are listening for Google Drive, asking you all also. Think that you are sitting live in front of me, then only you will learn. If one-sided, if I speak, you will not understand. Whether it will be allowed in case of SLM or not?
No, sir.
Not allowed? Here it is allowed? The answer is absolutely correct. The reason is very simple, because it is written that a further sum of 20% of actual cost of such plant or machinery shall be allowed as deduction under which section? 32 subsection 1 clause 2. Clause 2 is about which method? It is not saying 32 subsection 1 clause 1. Are you clear? Therefore, this is the disadvantage of going for what? Please say. SLM method. So it is your financial decision which one you want to take. Okay. Say for example, if you feel that in your business you are going to buy a lot of new machineries. Which machineries? Then don't go for SLM. Go for WDV and claim additional depreciation also. Okay. That will help you to save more tax. But if your business, most of the business your runs on second-hand machine only, okay, then it is go for SLM, because anyways you are not going to get additional depreciation. Are you clear? So this is what this provision is all about. You don't have to write all these things. I have mentioned this separately in the book. You can check over here if you want to see this. I have mentioned this. Okay, page number 2.11. Yeah, I would let you know a very good question asked by whom? Palani, that why there is a special benefit given to power generating units alone. Okay. Now, as I have told you earlier also, that the concept of block of asset method came from AY 88-89. Do you remember that? Dr. Manmohan Singh brought that. Before that, obviously, which method was there? Individual asset method, and there was SLM method. Okay. So when this concept was brought, the government does not want to disturb the power generating assessees. The reason is power generation is a very important sector of our economy. Very important even today. After 35 years, the provision have been brought. A block of asset concept has been 35-year-old now because it came in 88-89. Even today, we can say that still our country is not self-dependent in power. Even there are so many cities also, forget about villages and small towns. There are so many cities also where there are no power for 24 hours continuously. Therefore, the government would like to encourage them to the extent it is possible. The government is saying whatever you want to do, you do. SLM you want to do SLM. WDV you want to do WDV. Generate power in this country. That is more important to us. Okay. And they have been also given great amount of tax benefits which will come later on. There are great amount of deductions whereby the government has said that if you do power generating business, we will exempt your tax for the 5 years, we will exempt your tax for 10 years subject to some conditions. So there are great amount of benefits given by the government for power generating associates, so that there needs to be sufficient amount of power in this country so that every person can use that particular privilege. Okay. Is it clear? Shall I go ahead? So this is the first thing that I had to discuss. Okay. Shall I go ahead with the next part? So now we'll see how the depreciation is actually calculated in case of power generating assessees. See on the board, please, all of you. Please pay attention on the board. Suppose there is a power generating assessee. And they are opting for SLM. Okay. And suppose they have bought some furniture whose original cost is say rupees 100, or I would write rupees 100 lakhs. Okay. Pay attention, please. So there is a power generating assessee who is following SLM method, whose original cost is what? 100 lakhs. Furniture is depreciated at 10%. The rate of depreciations are same only, whether you are following WDV or whether you are following SLM, there is no difference. Okay. The rate is same. So every year the assessee will get what? How much depreciation? Depreciation per year will be rupees 10 lakhs, right? That will be the constant amount every year because in SLM it has to be same, right? So suppose 3 years have happened. So for 3 years, depreciation for 3 years will be how much? For depreciation for 3 years would come to 30 lakhs, right? Now after 3 years, the WDV of the assessee is what? It is 70 lakh rupees. Okay. Now pay absolute attention. The real discussion starts from here. Till here it was nothing. It was an 11th standard discussion. Okay. That you buy an asset of 100 rupees. The rate of depreciation is 10%. Therefore, the depreciation will come to 10 rupees every year. It is as simple as that. The SLM depreciation is the most simplest way to calculate depreciation. WDV is an issue. SLM is never an issue. Okay. Now pay attention, please. Shall I? Now the real test will start. Pay attention over here, please. Suppose now after 3 years, I am selling this asset. I am selling this asset. Then what will be the tax treatment on sale of this asset? That is what I want to teach you. Otherwise, there is nothing great in this provision. So after 3 years, I am selling this asset. Okay. Say I am selling this asset, case 1. Case 1, I am selling this asset, say for 50 rupees. That is 50 lakhs. Then what will be the treatment? Or if I am selling this asset, say for selling price of 80 lakhs, then what will be the treatment? And say if I am selling this asset, case 3, for how much? Say 120 lakhs. Then what will be the treatment? So I need to understand the treatment in these three cases. Vignesh, are you there? Pay absolute attention, please. What will happen? We'll see one by one. Okay. Till here, everything is simple here. There's nothing great till here. You buy an asset of 100 lakhs, 10% is the rate of depreciation, depreciate 10 lakhs every year. That's it. You will get the deduction under what? This is the deduction that you are going to get under which section? Under section 32, subsection 1, clause 1, right? Till here, nothing is there. It's a 11th standard discussion. But what will be the tax treatment on sale? That is what is relevant for me as of now in this provision. Pay attention, please, all of you. So the government says that if you sell this asset on which you have claimed SLM depreciation for less than WDV, so you are selling for what? Lesser than WDV also. Then the difference between what? Difference between the selling price and the WDV. Difference is how much? The difference between the selling price and the WDV. Okay. That will be allowed as a deduction to you. Don't worry. Okay. And we will term this deduction as what? As a terminal depreciation under section 32, subsection 1, clause 3. Listen carefully, please. So if you are selling your power generating asset at a price lower than WDV, in my case it is 20 lakhs lower, then the difference between the two will be allowed as a benefit to you as a terminal depreciation. What do I mean by the term terminal? What do I mean by the term terminal? Please say. Something which is ending, right? Something which is final in nature, right? So this is the terminal. When we use the word terminal, what do we use? When do we use the word terminal? We use terminal in reference of trains, etc., right? This is the terminal where the train what? Comes and stops, right? So this is the year in which your depreciation is going to be stopped. No. Your life of asset is ended 9. Yes or no? This is the last year of the asset with you now. So this is the last time we are giving you depreciation. It's a terminal depreciation. Terminal means last depreciation on this asset, right? So this is the benefit which is given by the government. Okay, shall I go ahead? So can I say this terminal depreciation is also an exception to the rule that you will be allowed depreciation also in the year of sale? So there are how many exceptions in totality? Can you see this exception ka list over here? That's it. Apart from these two and no other asset, you will be allowed depreciation in the year of sale. Is it clear? One is amalgamation, one is terminal depreciation. These are the two cases where you are going to get depreciation in the year of sale also. There is no third case. There is no third case. There are only two cases. Is it clear to everyone? Let's go ahead now. The world runs on principle of equality. Yes or no? Everybody has to work according to principle of equality. If I do something for you, you also should do something for me. So let's come to case 2 now. In case 2, we are selling the asset at what? More than WDV? How much more? 10 lakhs. So this 10 lakhs will be what? No, not capital gain. Capital gain will come after some time. This was deduction, na? So this will become what? How it can be exemption, yaar? If you are selling for less than WDV, it is a benefit you are taking or not? If you are selling for less than WDV, are you taking the tax benefit in the form of deduction or not? So if you are selling for more than WDV, if you are selling for, then you also have to pay tax on that, right? So that is a deemed income. Technically, this is called as balancing charge. What it is called as? Balancing charge under section 41 subsection 2. Why it is a balancing charge? Why this term is called as balancing charge? Let me explain you. Pay attention over here. Please tell me. Suppose this is the P&L of the assessee. How much depreciation the assessee has claimed till the date of sale? How much depreciation the assessee has claimed till the date of sale? I am repeating the question. 30 rupees, right? Total 30 he has claimed over 3 years, right? Now he is selling for how much? What is the WDV of the asset? 70. He is selling for how much? 80, right? 80 he is selling. Selling price is 80, right? So listen carefully now. He has taken total depreciation. Listen carefully over here. I am explaining the meaning of the term balancing charge. 30 rupees is the benefit you have claimed. 70 is the WDV. But your selling price is more than your WDV. It means you are taking the benefit, whatever benefit you are taking. Can I say you are recovering that benefit in the form of sale? How much you are recovering from the sale? 10 rupees extra. So please balance that much in the form of an income. Are you clear? So what can I say? It is the recovery of your benefit only which you have taken earlier. Yes or no? So therefore, this will be considered to be balancing charge. The world runs. When I was saying this, you are on call, Palani. The world runs on a principle of equality. That when you are selling at a lower price, we give you benefit. So when you are selling at a higher price, we have equal right to take back the benefit. Yes or no? Shall I go ahead? Please tell me. Okay, the book has come. Okay, just take that. So understand with logically each and everything. When you are selling the things at lower price, you are taking the benefit. So when you are selling the things at higher price, you have to reverse that benefit. Yes or no? Balancing charge is nothing but reversal of whatever benefit you have taken earlier. Okay? How much benefit we have taken? 30 rupees. Out of which how much extra we have recovered? 10 lakhs. Reverse that. So now please tell me, all of you, if you have understood this logic, how much should, here obviously there will be a balancing charge. Okay, there cannot be terminal depreciation here because you are selling more than WDV, right? How much will be the balancing charge here? Balancing charge is nothing but recovery of what benefit you have taken earlier. How much? Only 30 rupees. Why? No doubt your difference between WDV and your selling price is 50 rupees. Do you agree? The difference is 50. But how much benefit you have taken under in PGBP earlier? It cannot. Balancing charge cannot be more than the benefit which you have taken earlier. Are you clear? Is it clear to everyone? So I am again repeating the provision. See over here, please. Please tell me, please see here. All of you, please. Don't see the provision. If I sell for less than WDV, then benefit, terminal depreciation, right? If I sell more than WDV but less than cost, then the difference is deemed income balancing charge. If I sell more than WDV and more than cost also, like 120, 130, 150, then depreciation claimed earlier is balancing charge. Is it clear to everyone? Now, this is something that I am coming to. That is the second part of the discussion. Okay, Vignesh, just wait. Now, pay attention, please, all of you. Are we transferring a capital asset? Are we transferring a capital asset? So should there be an implication of capital gains as well? Are we transferring an asset or not? So should there be an implication of capital gains also in these cases? Now see, the real thing will come over here. Pay attention over here. I am starting from case 3. What is the formula of capital gains? Please tell me. A simple formula. Sale minus cost of acquisition, right? Yes or no? I am not getting into indexations and all. If it is long term, you can take indexations also, right? You can do that. But assuming it's not long term, we are selling before 36 months. Let's assume that. Okay. Now pay attention on the board, please, all of you. What is the selling price in this case? Case 3? 120. Right? Pay attention. Huh? What is the cost in case 3? Cost. Cost is same, na? Whether it is case 1 or 2 or 3. What is the cost at which we have bought the asset? 70. Cost is not 70. Don't forget this. What is the cost? 100. Therefore, 20 rupees will be called as what? capital gains. So how the entire 50 rupees is getting charged, can you understand? 30 rupees is getting charged in PGBP. Are you clear? In the form of deemed income under section 41(2), and 20 rupees is getting charged in what? Say na please. Capital gains, in the form of capital gains. Obviously the tax rates would be different under PGBP and the tax rates would be different under capital gains. Are you clear? The tax rates would be different under both the head. Otherwise, both of them are taxable only, but the rates would be different. In capital gains, the rates are different. In PGBP, the tax rates are different. Okay. So the question which you asked now, Vignesh, what will happen with the remaining balance? Yes. The remaining balance, is it clear? Will be covered under capital gains. Is it clear? But the question, real question starts here. See over here. See over here, all of you, please. The same treatment shall I not do over here also or here also? Because I am selling in all the three cases now. Are in case 1 also I am selling or not a capital asset? Are I am asking you a simple question, yaar. If in case 3 I am selling a capital asset and computing capital gains, in case 1 or 2 also I should compute or not? So let's compute in case 1 now. What is selling price? Are in case 1, what is selling price, yaar? How much it is? 50 lakhs, right? What is the cost? 100. Therefore, it will come to how much? 100 lakhs. 50 minus 100 will come to 50 lakhs capital loss. Yes or no? Please tell me, yaar. It will come 50 lakhs as capital loss or not? Please try to pay attention for the next 5 minutes. Is it a capital loss or not? Yes, it is a capital loss. Now listen carefully. Please see here. Prashant, please see here. Now, if the government stick to this particular treatment, there is a huge loss to the government. Let me tell you how. See on the board, please. You have to pay absolute attention on the board. Can I say this assessee in case 1 is first taking the difference between 50 and 70 lakhs as terminal depreciation as benefit? Is terminal depreciation a benefit or not? Is he taking the deduction under PGBP of 20 lakhs? Then at the same time, he is again taking the tax benefit of 50 minus 100 as capital loss. Is he taking dual benefit or not? Yes or no? Is he taking dual benefit or not? First 50 minus 70 as PGBP deduction. Then 50 minus 100 as capital loss. Is he taking dual benefit or not? Please tell me that much. The government says that we are not intending to give you dual benefit. And we do not believe in this calculation. And they said that we do not believe in this calculation of selling price minus cost of acquisition 100 rupees. Then I said, what do you believe in? They said selling price is correct. How much is selling price? Say na. Selling price is correct. How much it is? 50 minus cost of acquisition. You cannot write 100. We will redefine cost of acquisition. We will do what? Please tell me. Redefine. Now they have redefined cost of acquisition in such a manner. Listen carefully. They have redefined cost of acquisition. Listen carefully my sentence. Listen to my sentence. They have redefined cost of acquisition in such a manner that if there is a gain coming, it will remain gain, capital gain. But if there is a loss coming, like in case 1, it will become 0. If gain will come, that will remain gain. But if loss will come, like it was coming na 50 rupees loss. In case 1, 50 rupees loss was coming or not? That loss will come to 0. See what is the formula they have said. They have said we do not believe in 100 rupees as cost of acquisition. We want revised cost of acquisition. What we want? Revised cost of acquisition, that they have called as adjusted WDV as per section 50A. They have defined that in 50A because capital gains is covered under 45 to 55, right? So they have to redefine something in 45 to 55. They have to make a provision between those sections. So shall I say the revised cost of acquisition? Please tell me. Yes, sir. So they have said that we do not believe in 100 rupees. You cannot take 100 as cost. Then I said, what should I take? They said that WDV. What is a WDV? No. What is the amount of WDV in our example? It is 70 lakhs. Okay. They said add terminal depreciation, less balancing charge. Whatever is the amount, that will be considered as what? As your revised cost of acquisition. Let me tell you what. Listen carefully. Why they have defined so. Please tell me, is terminal depreciation a benefit for you? Yes or no? So what they have done over here, listen carefully. Just wait a second. Okay, sorry, I have just said it exactly opposite to what it should have been. I'll just remove this. Okay, I have to say opposite of that. They have said add balancing charge, less terminal depreciation. Okay, now listen carefully. Try to understand mathematically. Don't get into the book. Just wait. Is terminal depreciation a benefit for us?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Just revise the numbers in case 1. What is the selling price in case 1?
50 lakhs. 50.
What is the WDV in case 1?
30 lakhs. 70.
Have we taken the difference between 50 minus 70 as terminal depreciation?
Yes, sir.
20 rupees we have taken as PGBP benefit, right? So now adjust that benefit in the form of what? Cost of acquisition. So reduce from your cost. Are you able to understand? So that you don't get dual benefit. If I reduce from my cost will reduce, my gain will increase, right? I could easily tell you that by heart this formula. Add balancing charge, less terminal depreciation. But then you will make mistake sometime later. The way I have made a mistake just now in the process of saying you in a hurry. Please tell me, terminal depreciation is a benefit or not? Have you already taken the benefit in PGBP? Now do not take that benefit against in capital gain. So reduce that much from the cost. Are you clear? So if I reduce 50 from here, the cost will come to 50. Now what is the selling price? 50. What is the revised cost? 50. Capital gain 0. I have told you now, the capital loss cases will come to 0. Are you clear? Earlier it was coming 50 lakh capital loss now if I was taking 50 minus 100. So they have brought that loss to how much? To 0 rupees or not? So that you do not take dual benefit. Please give me the answer to the second case. Don't be in a hurry. In second case, what is your selling price? 80 lakhs, right? 80 lakhs is your selling price. Okay. What is WDV? Second case, WDV is same only na for all the 3 cases. In second case, what is there? Balancing charge or terminal depreciation? Balancing charge is there, right? So add 10 rupees. Terminal depreciation is not there. Therefore, my revised cost will come to how much? 80. Therefore, this will come to 80 rupees, right? And therefore, the capital gains will come to 0. Because again in second case, it would have been capital loss. How it would have been capital loss? Because normally the selling price in second case is 80 and cost of acquisition is 100. It would have come to loss of 20 lakhs or not? Please tell me. So wherever the loss is coming, they will make that loss to 0 rupees. Are you clear? In third case, what is coming? Loss or gain? Gain, na? See, apply this formula, gain will remain gain only. Check. 70 rupees is the WDV. Add balancing charge 30 rupees in third case. Terminal depreciation 0. What is the revised cost? 100 rupees? Yes or no? See, revised cost 100. Gain will remain gain. Such a magic. And loss will become negative. Loss will become 0. So that you should not take what? Dual benefits of the same amount. Are you clear? I'll just change the numbers so that we can just recap the things once again. Okay, shall I? Suppose I bought an asset of the cost of say 7 lakh. I'll change the numbers. Okay. I bought an asset for the cost of acquisition of 7 lakh. The rate of depreciation is 10%. 3 years have gone. So after 3 years, how much depreciation will be reduced? Please tell me. 2,10,000, right? Correct or not?
Correct, sir.
So my WDV will come to how much? 4,90,000. Till here everything is fine. Now, my first case. Suppose if I sell this asset for 3 lakh rupees, then what will happen? Suppose if I sell this asset, let me just write down all the 3 cases. If I sell this asset for 6 lakh rupees, then what will happen? Okay. And if I sell this asset in case 3 for say 9 lakh rupees, then what will happen? Will you be able to answer me? First PGBP effect and then capital gains. Okay. First PGBP effect. What will happen in this case? Tell me fast. How much terminal depreciation? 1,90,000. Selling price minus WDV. Is it clear, Palani? What will happen in second case? How much balancing charge? This minus this will be balancing charge, right? 1,10,000. Is it clear? That will be your deemed income. Add to income, pay PGBP tax. What will be the third case? Effect in third case. Balancing charge, how much? 2,10,000 to the extent you have claimed depreciation earlier, right? Is this effect 100% clear to everyone? Now let's talk about what? Capital gain implication. Let's write the formula of capital gains first of all. Selling price minus, shall I write revised cost? Revised cost I will write. Okay. What is the selling price in first case? 3 lakhs. What is the selling price in second case? 6 lakhs. Right? What is the selling price in third case? 9 lakh. Okay. Now I cannot write over here what? 7 lakh, 7 lakh, 7 lakh. Okay. I cannot write 7 lakh. Okay. I have to write revised cost of acquisition. Correct? So how to arrive at revised cost of acquisition? Please tell me. What is the formula? WDV add terminal depreciation or add balancing charge? Please see that. Even I get confused sometime. It is add balancing charge. Okay. It is not add terminal depreciation. Add balancing charge. And less what? That's what we have done over here also, Vignesh. See. Okay. You have to just think like that. Huh? Is balancing charge a benefit or a disadvantage? So take benefit in cost. Okay. And is terminal depreciation a benefit or disadvantage? So give back the benefit to government. Take the disadvantage now. Okay. Try to remember it that way. So in first case, WDV is how much? 490. WDV is 490 in all the three cases. Now indirectly tell me in first two cases what is going to come? 0. It will come to 0. And in third case capital gain will come, right? This will always work. Now we have to just fill these numbers here. Balancing charge is there in first case? No. Terminal depreciation is there? Yes, 190. So this will come to how much? 3 lakhs. Correct? If I put this 3 lakh, this will come to 0. Correct? In second case, add balancing charge. How much? 1 lakh? 10,000. Correct? Less terminal depreciation not there. This will come to 6 lakhs. This will put 6 lakh. This will come to again 0. Correct? And in third case, add balancing charge. How much? 2 lakh 10. 2 lakh 10 will make this how much? It will make this 7 lakh. Okay, I'll put this 7 lakh and therefore 2 lakh will come to my capital gains. Is everyone clear with this? Now this same example is there in your book also. Don't worry. If you want, you can go through this example now. Okay, just go through it once. Yes, please.
Just a small question. In examination, for the first two cases, would there be marks allocated for capital gains also?
Yes. Yes, in the question asked by Prashant in the examination for the first two cases, would they be allocating marks? Yes, that is also a calculation done by assessee, whereby you have to compute the adjusted WDV as per this. You have to do it, even though they have never ever asked this provision ever in the exam. This SLM depreciation is not at all important for exam. For exam, what is important is WDV. They don't ask SLM because SLM is, you also know, is it going to be useful for us in practical life? For that, we have to go and do the tax audit of what? And there are hardly few power generating companies in this country. Yaar. Hardly. Yes or no? Power generating is not done by every small company. So that is the reason academically they don't ask such provisions. It's not important for exam. Yeah.
For generating or also for distributing?
It's for both. It's for generating or generating and distributing both.
So the same thing that is included in 32(1)(2)A.
Is it clear? Okay. Now, one small thing which is very practically very important. The thing which I am trying to say now is very important practically, not important academically. And that is pay attention on the board, please. Suppose if I buy a asset, suppose if I buy a car, for example, or for that matter, if I buy a mobile phone, okay, or so say for that matter, if I buy a laptop, I am an individual, Mr. A. Say I bought a mobile phone, okay. The cost of the mobile phone is say 1 lakh rupees. Now we know that mobile phone is depreciated at 15%, right? Now suppose if I use this for partly business and partly what? Personal. Then how will I compute depreciation? Will I get full depreciation? Or will I not get any depreciation because there is a personal element? Or will I get proportionate depreciation? These are the three possibilities which are there, right? What do you think? What will happen? This is very common thing. That's the reason I said it's very practical, because there are so many clients of yours who are individual clients, right? Who might be using common assets now. I have one car, for example. Now that one car is used for business also and for my family also. How will I claim depreciation? I have two laptops. For example, if one is dedicated for classes, one is dedicated for personal use, then it is a different case. But suppose if I only one laptop, or if I only one mobile phone, or if I only have one car, then there is always a question which can be raised by the department, that you cannot say that I am exclusively using this mobile phone for my business purpose. So what shall be done? What do you do in your office? Please tell me. What do you guys do in your office? What do you guys do in your office in such cases? Palani, have you come across such case? Full depreciation. It cannot happen that you have never been to such circumstance. It cannot happen. Have you filed any return for an individual? Okay. Vignesh, have you filed return for an individual engaged in business? Full depreciation we take na in practical life, right or not? We don't think much. अरे we have an attitude, what you know, अरे देख लेंगे, जब officer will come देख लेंगे, we will see when officer will ask, right or not? We have that attitude, but we cannot learn direct tax with that attitude. That might be your practical attitude. In practical life, in practice, you might do that. Even I do the same thing. I have this phone only. I have this phone. I solve your queries through this phone, and I also use for my personal purpose. Still, I claim depreciation on this phone. Okay. I claim depreciation. So, I to claim depreciation on this watch also. Forget about phone. I claim depreciation on this watch also. If someday the department will ask me how the hell you can claim depreciation on watches now, I would say it's important for me while taking the lecture. This watch gives me notification which call to attend, which not to attend. That is the reason it is important for my profession. I can defend myself. But the question is not that. The question is to what extent it is business and to what extent it is personal. Okay, so for that purpose, the government has made one section, section 38, subsection 2. There is a section for that which says what? Let me see. Let me read the provision for you all, that what exactly the provision has to say, where the asset is partially business and partially personal. Okay. Let's see what the government has to say in such cases. Shall we? Shall we? Yeah, just a second. Can you just search for me? Where is exactly 38.2? It's such a small provision now. It just skip in scrolling. 38 subsection 2. Yeah, it is here. I got it. 2.18. It's very small that it gets skipped in scrolling. 38.2. Asset not exclusively used for business profession. where any building, machinery, plant, furniture is not exclusively used for purpose of business or profession, then the deduction under section 30, section 30 we don't know as of now, forget it. Or the deduction under section 31, 31 also we don't know as of now, forget it, we'll do tomorrow. Repairs, insurance, I am interested in the next line. The deduction under section 32, that is depreciation. Yes, we know depreciation. Shall be what? Restricted to a fair proportionate part thereof, which the assessing officer may determine having regard to the use of such building, machinery, plant or furniture for the purpose of business or profession. So, Vignesh, you take full depreciation, right? So, can assessing officer call you tomorrow and say that, prove it that 100% it is used for business? Yes or no? At that time, if you are claiming full depreciation, you have to prove it. Or else he will disallow what? Proportionate depreciation. Are you able to understand? Now, what proportion that government is not ready to say? Because nobody can say in this world, without looking into the circumstance that exactly how much personal, how much business. Nobody can say that. Yes or no? So that will be disallowed based on what? Facts and circumstance. If AO feels that 40% is personal, then what is the depreciation on this mobile phone? 15,000. Okay. And if he feels that 40% is personal, okay, then he will only allow you how much? 60%. That is how much? 9,000 rupees. Are you clear? So that percentage is not written by the law. The law is under confusion. That is the reason the law is saying a fair proportionate. Fair proportionate means what? Something which is genuine. Yeah. Claim a genuine depreciation. Don't unnecessarily claim fake depreciation. Is it clear to everyone? Okay. So this is a small issue which is relevant in practical life, but honestly speaking, nobody follows this provision. Nobody. All the assessees who are partially using the asset for personal and business, they claim full depreciation only, as said by the Vignesh. Even I claim full depreciation. We will see, we say that we'll see when the assessing officer will raise the question, and generally they don't raise in small cases. Now, suppose if I buy a Range Rover, okay, and then in case of Range Rover, if I say it's a 1 crore car, and if I say that I am using it 100% for business purpose and I don't have any other car especially, that time the officer is not going to stop. He is going to definitely raise a question because the stake of the department will rise in that case. Okay. But in case of laptop of 1 lakh or 50,000 mobile phones, what difference will it make to the department here? It's a matter of 2-3,000 rupees here and there. Yes or no? Ultimately, the tax benefit will be that much only, na? If it's a 50,000 asset, 15% depreciation of 50,000 will come to 7,500. 40-50% disallowance will amount to how much? 3,500. Who will do all those things for that? Yeah, nobody is going to do all those things. Okay. So if it is a big asset, then definitely they can raise a question. Okay. Not in case of small asset. So you have to be very intelligent enough. When you buy a big asset, you have to be registering in the name of company and you have to claim depreciation accordingly. Don't buy in your personal name. Okay. So that they cannot raise any question. So this is an issue which is more important practically rather than academically. Now, there is one last thing in this chapter that will complete the discussion of depreciation completely, except one thing, except two things, that is some explanations which we have skipped as I have told you, and one discussion on the ICDS on subsidy. Okay, apart from that, most of the things we have done in this chapter. We will also make a recap of the entire depreciation if possible today. Today it's not possible because we'll not be able to complete today. So tomorrow we'll recap depreciation completely first, from the very first page till the very last page, and then we'll move ahead towards our other deductions. Okay. Now, one last thing is over here is a very important section. Now, section which I am saying you now is an extremely important section, that is section 43A. Academically, it is very, very, very important. It's a very important section and ICI likes this section a lot, and they have been asking this section again and again, in the exam. Okay. Now, pay attention please, all of you. What is this section all about? Pay attention please. This section is applicable if the assessee, conditions for applicability of this section. First of all, I will tell you the conditions, and after the conditions are known, I will tell you the treatment also. Okay. So first listen the conditions. Condition number 1. Sir, what is the condition? If you import an asset, import an asset, to be precise, a fixed asset. Plant, machinery, furniture. Okay. And condition number 2, both the conditions have to be fulfilled to make this provision applicable. And there is a foreign currency loan. Okay. Or there is a foreign credit. There can be two possibilities. Either you have taken a loan from a foreign bank, okay, or your creditor himself, from whom you have purchased the machinery na or furniture na, that himself has given you what? Credit for 6 months, 8 months, 1 year, 2 year, whatever is possible. Yes or no? Is it clear? Shall I go ahead? Please tell me. Shall I go? Foreign creditor or foreign currency loan. You can buy asset in two form na. You have taken a loan and you have bought an asset, or you have taken the credit from the supplier itself. Okay. You have not gone to the financial institution or banks to take a loan. Your supplier himself is giving you credit of 6 months, 8 months, 1 year, 2 year, whatever it is, depending upon the relationship you have with the supplier. Okay. Shall I go ahead? Now listen carefully, all of you. Yeah, please. Pay attention, please. If these two conditions are fulfilled, 43A is applicable. Okay. So I have not told you what happens in 43A. I am just telling you as of now what is 43A. Okay. 43A applies if these two conditions are fulfilled. Now, if these two conditions are fulfilled, 43A is applicable, then what will happen? What is the effect of that? Okay, what is the tax implication on that? Then in that case, the government says that any gain or loss on payment, the very important word over here is payment, shall be adjusted in the WDV of the asset. What kind of gain or loss I am talking about? I am talking about a forex gain or loss. If I take a foreign currency loan, will there be a gain or loss or not on payment? Please tell me. So whatever gain or loss is there, suppose when I bought the machinery at that time, the rate of dollar was 80 rupees. But when I make the payment at that time, the rate is 90 rupees. Is there a loss or not? No. For me of 10 rupees. So that loss is what? Is it an extra cost to me? So add to the WDV and claim depreciation. Did you understand? That extra cost is an extra money which is going from your pocket now. Add to the cost, claim depreciation. The point I am trying to say, income tax says that in such case, you will not take the gain or loss to P&L account. Are you able to understand? Generally what happens? The gain or loss goes to what? The P&L account, as per your accounting standards, right? But here it is not going to go to P&L account. It is going to go to the block of asset. So if you have bought the, I'll give you the complete example. Just wait. I'll make you write the example also. The second thing which I would like to tell over here is, suppose if I bought the asset for 80 rupees. When I bought the asset, the dollar rate was 80 rupees. But when I made the payment, the dollar came to 70 rupees. So is there a gain or not on payment? Is there a gain or not on payment? Yes. So that gain has to be reduced from the WDV of the block of asset. Okay. If loss has to be added back, the gain has to be reduced. Now it's very simple. Now there are some very important differential treatment as compared to what accounts do. First of all, accounts recognize forex gain or loss in P&L account. Do you agree? Secondly, accounts recognize foreign gain or loss on accrual basis. For example, on 31st of March, you have to revalue the loan and then you have to find out how much is the accrued gain and accrued loss and take it down to P&L. You do that or not? Please tell me. But here you are not supposed to do that. Here you are supposed to adjust gain or loss on which date? On payment. On balance sheet date, you are not going to touch gain or loss. Are you clear? Now let me give you an example. That example you have to copy. That is very important provision. This provision you will find out in every exam paper of ICI in the form of an adjustment of a total income quotient. Let me give you an example. See on the board. Previous year 22, 20, 23, 24 is going on. Okay, pay attention on the board. I bought a furniture for $1 lakh on 15th of June 2023 when $1 was equal to rupees 80. Okay. On the date on which I bought the furniture, $1 was 80 rupees. Okay. Now, therefore, my opening WDV of furniture will be how much? It will be nil. I don't have any furniture, assuming that. Add purchases on what? On 15th of June 2023. How much will I write down in the block of asset? Please tell me. 80 lakhs, right? Not 8 crore. It will be 80 lakhs, right? It will be 80 lakhs now. How it can be 8 crore, Vignesh? 80 lakhs. Correct? Shall I go ahead? Shall I go ahead? Now, I am assuming that no payment made during the year. No payment made during the year. During previous year 23-24. Shall I touch forex gain or loss?
No.
Shall I do anything for forex gain or loss? No, don't do anything. Why? Because there is no payment made during the year. So at the end of the year, you directly do what? Compute depreciation at the rate of 10%. Okay? Because the asset was put to use on 15th of June, right? Take 8 lakh depreciation and therefore your WDV on what? 31st March 2024 will be 72 lakhs. Is it clear? And in your balance sheet, there is an outstanding loan of 1 lakh, $1 lakh. Okay? Assuming that this is on loan. This is completely on loan. Okay? If you directly outrightly pay, then the question of gain or loss will never arise. Are you clear or not? The question of gain or loss will arise only if there is a loan attached to it. Let's move to the second year now. Pay attention on the board, please. Second year. Previous year 2024, 25. Second year. What is the opening WDV of the furniture? It is 72 lakhs. Correct? Now suppose I paid loan $20,000 when $1 was equal to say 90 rupees. So please tell me, there is a gain or loss?
Loss.
There is a loss. Is there a loss on payment?
Yes, sir.
Is there a loss on payment? So what shall I do with that treatment? Add to the WDV of the block of asset. Add loss on payment. How much it is? It will be 10 rupees per dollar into $20,000, right? It will be 2 lakh rupees. Therefore, my WDV before depreciation will come to 74 lakhs. Clear? Less depreciation at the rate of 10%. How much it will come to? 7.4 lakhs. Therefore, WDV on which date? 31st March 2025 will come to 66 lakhs 60,000. Clear? Is it clear? Now let's move on to the third year. We'll see all the varieties. 2025, 2026. The opening WDV is 66 lakhs 60,000. Is the calculation correct? If there is a mistake, then next year also there will be mistake. Please just verify that. I again repaid the loan of $20,000. Now $1 is equal to, when I paid, it became 70 rupees. So there is what? There is a gain of what? 2 lakh rupees. So I will reduce that gain. Gain on payment. The catch is, on payment you are supposed to do all these things, not on balance sheet date. On balance sheet date, nothing has to be done, as I have not done anything in case 1, right? So gain on payment 2 lakhs. This will come to how much? 64 lakh 60,000. Clear? Minus depreciation at the rate of 10%. How much it will come to? 6 lakhs 46,000. And therefore, this will be my WDV on 31st March 2026. Okay, whatever is the answer, you can write down. And this is the logic which will apply till the time you don't repay the, please tell me, entire loan. This is going to happen till that time. Is it clear? Now let me make you read the provision first and then we'll go ahead with the writing aspect of that. Section 43A. What is 43A? Just see the left hand side. Don't see the right hand side. Right hand side we have not done so far. Okay, that will do after 43A is completed. Fixed asset purchased from outside India. This section is only applicable if you purchase fixed asset by importing it. You have to import it. Okay. Shall I go ahead? Plus loan in foreign currency or foreign supplier. Then gain or loss shall be adjusted in the WDV of the block of asset on the date of what? Payment, payment and payment. No adjustment shall be made on what? 31st March. That is the balance sheet date. Is it clear to everyone? So please write down this entire example in your notebook. Example on 43. It's a very important provision. Lot of time this adjustment comes in the exam, please. Just copy this right now itself. Please, all of you. Prashant, you are showing your biceps. It's okay, no issue, no issue.
Feeling very hot.
Okay. You just write down this, and I have to leave today early because of some reason. So after you write down this, we'll just for today, we have to end the lecture here. Okay. And we'll continue the discussion of 43 AA, which is opposite of this in tomorrow's lecture. Okay. Just write down this amount also, please. Mark this as an important provision. It's an important one. So tomorrow's agenda would be, we will complete depreciation, and we will also complete other small deductions like section 30, 31 and 36. These are very small deductions. And then from next week onwards, we are going to target the sector wise deductions. Okay. All the important sectors like scientific research, telecom, like tea, coffee, rubber, like 3580 investment link, hotel, hospitals, so on and so forth. Okay. So we'll just end here.
So only one doubt, sir.
Yeah, sure. You can ask.
Sir, we have how to make notes, sir. We have keywords, so should I summarize those keywords?
You have to follow our color book. Okay. And whatever important notes I will make you write, just write down that much. Otherwise, it is not required. Okay. Wherever there is a need to write a chart or some examples, okay, I will make you write, or I will tell you to at least take the photograph. Go home and write. Okay. Otherwise, you have to follow this color book. That's it. This is your Bible. Nothing will come beyond this book. It covers every provision in a concise and precise manner, and also in a comprehensive manner. It is not just concise, it is also comprehensive to every extent. And we have made it very practical, which could be practical enough. It is approachable at least to revise a day before exam. I could have made a 1000 page book. Doesn't make sense. It is not possible to revise a day before exam. Okay. So we'll continue the discussion tomorrow. Okay. Bye all of you. Sunday is off now, or there is a lecture. I don't remember. Sunday we have kept off, right? Okay. I don't remember the schedule. Yeah. There are so many lectures going on. I'm just confirming from you all. Okay. Okay. Fine.
Thank you.
Thank you.